shift focus to one company which we are highlighting today on the show. Thermax, the company in fact has been upgraded by Goldman Sachs. It's been upgraded to neutral from a sell earlier, and Goldman Sachs now has a 12-month target price of 813 rupees. This is based on possibly trading at around 17 times FY15 estimated earnings. MS Unnikrishnan, the MD and CEO of the company, joins in to talk to us this morning. Hi Mr. Unnikrishnan, good to see you in this morning. One of the reasons why Goldman Sachs has actually upgraded Thermax is because they believe that the order book will possibly see a revival going into FY15. Now, is that a plausible scenario according to you, considering that there could be some amount of significant pickup in the capex post-elections?
Certainly, but don't expect anything to be happening dramatically overnight immediately after the elections, because there are sectoral improvements expected purely based on capacity utilization in the country. For example, if you wanted to get into cement industry, the capacity utilization is hovering between 65 to 85%. I'm sure with the construction going to be catching up back, you should be seeing the cement demand increasing. NHI projects getting again online, and more highways getting constructed, or maybe more contracts going to be happening. Next year you should be seeing the demand for cement surging a little closer to maybe a 90%, which is in my opinion the inflection point where the current capacities need to be upgraded. So you could expect a revival of that industry in the second half of the coming year. Similarly, steel industry is showing some improvement in consumption pattern and production pattern, so you could see an improvement in that area. I don't expect anything to happen in the oil and gas sector or in the power sector substantially in the next 1 year. So sectorally you may have some improvement visible in the next year. However, the real improvement that we are expecting is in the year after that, because whatever is said and done, a new government to come in place, ministry to be formed, thereafterwards they start taking actions, the parliament to be passing various policy directions. With that there could be a revival. So I'm not expecting a drastic changing in the coming year. However, a revision or maybe a green shoot should be visible next year. That's my assessment of the situation.
Sure. Mr. Unnikrishnan, hi, good morning. That's an interesting point, because I was just talking to an analyst who was talking about the big rally that we've seen in power stocks, power finance stocks. The case that is being built is that there's already signs of green shoots and improvement, especially in the power sector over the last 1 month or so, purely on the hopes of a strong government in a month's time. Do you think that's too far-fetched at this point in time? And you haven't really seen any kind of improvement on ground?
Though that's what you're seeing or talking is purely speculative, don't mistake me on the count. Power is a little more complicated. Of all the sectors which need to be revived, power is the most complicated, but it's not going to be an easy task. The reasons are multi. Starting with the new land acquisition bill which got passed in the parliament is not fully operative. As it's going to become operative, going to increase the cost of land by approximately 4 to 5 times, which means you're going to have a substantial impact in the capital cost of that, which has to be passed on to the ultimate power charges to the consumer. Second is the restructuring of the loans, outstanding loans of the state electricity boards are yet to be completed, though 3-4 of them are already signed, the balance is yet to be happening. And this summer is going to be very, very critical to look at and understand as to what is the behavior of the distribution companies predominantly owned by the state governments the summer coming in. Last year what they've done was they opted for not buying power at a very high cost because they couldn't be recovering the same money from the consumers. For example, in summer with the shortage, you may have a short-term purchase of power going all the way up to 8 to 9 rupees a unit of electricity. But the average recovery of the electricity boards in the country are less than maybe 3 rupees a unit of electricity. So they can't be affording to buy power at 8 9 rupees and sell at 3 to 4 rupees, and then the balance should be signed as a check as a subsidy to the distribution company. So last year we saw a lot more of power cut in the rural area. Versus in the current year, will the electricity boards believe that it is a duty to be supplying power and buy and transfer? This is what is going to be the precursor for a turnaround in the power industry. It has nothing to do with the policy decision in the parliament. So in my opinion, it is going to be taking a little longer time for the power industry to be reviving. Next issue you need to look at is, apart from the public undertakings, you look at the private power producers. I'm not naming any one of them. At least you take the top 5 of them. How many of them are making money currently on the balance sheet where they can invest for the new capacity? So a revival of the power industry being anticipated immediately, green shoots being spoken, these are speculative and intention oriented rather than fact oriented.
Okay. Mr. Unikrishnan, just wanted to get back to the business. One of the key worries in the capital goods sector which has been brought out has been the receivable days that have been increasing. So despite order inflow actually, slowing down, there is a fact that maybe receivable days are possibly even going to increase. Can you give us a sense about how Thermax's receivable days have panned out in Q4 at least, and what is your expectation going forward? Is working capital becoming a little bit of a problem for the company?
See, Thermax's case may not be the case for Indian capital goods industry because we manage the balance sheet slightly at a deviation to the conventional practice. So let me talk about the industry, and Thermax let me come back to. Industry is seeing a substantial surge in the accounts receivables on the balance sheets of various capital goods suppliers on two counts, that the projects aren't moving at the same pace that they were moving at 2 years back. So there is a slowdown in the projects, and there are customers whose balance sheets are under stress, so their ability to generate cash to pay for the current projects are also under question. So that's why you might see, especially the companies who are exposed to power sector, steel, some of this kind of sectors, you can see them having stress on the accounts receivables. In our case, what you opted for is, despite having orders on hand, we have regulated the execution of the projects in such a way that the cash flow and the project executions are almost going at the same pace. If there is a slowness in liquidity and arrival of money to our balance sheet from our suppliers, we would discuss with the respective companies and say that please help us with the cash flow to execute your projects. I'm not trying to say 100% we are successful, but at least we try to at least attempt, by which we are able to manage. But still you will find the accounts receivables of Thermax also have increased in comparison to what it was last year, but not the way the market has moved into a desperate situation. So we are taking a calibrated call to pull down the top line of the company, which means also the bottom line of the company, at the cost of the AR. We don't want to be having a higher turnover and the profitability shown on the balance sheet, but there's no money in the balance sheet. So that's the point number 2. And as a company, we don't have any debt on the main company. There is no debt, and our borrowings are very limited. So we have got cash on the balance sheet available to be managing the working capital. We are in a little better position in comparison to others. See, the message over here is, if the capital goods industry were to be wanting to prop up the balance sheet to show higher sales in this kind of difficult circumstances, certainly you will have the accounts receivables under stress. And once it catches on, it will be very difficult to collect the money. So Thermax is opting for a reduction in turnover rather than an increase in turnover at the cost of accounts receivables.
All right, Mr. Unikrishnan, thanks a lot for your time.